Fellow traders, welcome back to another edition of our training session. So now that all the training videos have been made, we're going to talk about risk management, money management, trade management, watch lists, and that is how to prepare for the week. So the market closes at around 10 p.m. every Friday and reopens around 10 p.m. on a Sunday. That is UK time, 10 p.m. So if you are in Japan, Australia, that's going to be a different time. And the market has got three sessions. They've got the UK session, which opens around 8:30 UK time. And then the US session, which is 2:30 here, and that'll be around 8:30 a.m. in US. Then we've got the night session, which is the Asian session. So on Sunday night, when the market begins, it begins at the Asian session. So due to different time frame, if you want to do Asian session trading, then in UK you have to be up, just like as I'm up and I'm analyzing the market. But I don't normally analyze the market on Sunday around like this. You can see I've got positions open because when the market closes after Friday, I've got Saturdays and I've got Sundays during the day to do my analysis and my watch list for the week. So what watch list simple terms means is you go through all your chart and you look for markets that are setting up for either a buy or either a sell market. So then you put them on your watch list. It means that these markets are setting up for a buy or they are setting up for a sell. So you put them on your charts, which means that you're going to keep a close eye on them. Just like I was short on the Euro Yen on Friday and I took my profit from here. So on this day, I'm waiting for it to have a little bit of pullback here. Then I'll go back in for a sell. So I've still got the pound yen and the Euro Yen all on my watch list because they are downtrend and I'll look for an entry positions to get in. So watch list makes it easy for you to know which trades you are going to trade each week. Whether you are a swing trader means you're going to be in the market for a couple of days and you usually trade for 4 hour charts, and probably it could be even 1 hour chart. And you have a position trader, which it is me. So I'm taking my trade for weekly and daily charts, which means I'll be in the trade for a couple of weeks, couple of days, or a couple of months because I'm following the trend. And we have day traders which trade for daily income. So normally they will be using the smaller time frame, whichever suits their trading style. From it could be 4 hours, it could be 1 hour, it could be 30 minutes, 15 minutes, 5 minutes, 1 minute. So each trader is whatever they are comfortable with. So short watch list is a great tool that every trader have to do because it gets you ready, and it gets you ready for the new week. So you know the market that you are looking, and you put them with a tick. So for instance, I'm looking to sell Euro JPY, Pound JPY. So on my watch list, I have the sell side and I have the buy side. So the market that are getting ready for buy, I put them under the buy side. The market that are getting ready for sell, I put them on the sell side. You can have your watch list either in a book or you can just do a spreadsheet for your watch list and also do a spreadsheet for your order book. So all these orders that I have an order books that they go in on a spreadsheet. So I just go to my spreadsheet and do the order book. So that is really amazing for that to happen. So you can see the US 30 has just opened. So I'll be looking for it to pull back a little bit. Then I'm going to go in for a sell, or I can even put a sell limit around 26569 or a little bit around here. 266,515 for a sell position. So I can go in, I can put a sell limit, pending order, sell limit around 26615, and my take profit is going to be 26124, 26124.95. That's going to be my take profit, and my stop loss is going to be 26721, 26721. Then I place my limit order. So this is watch list is an essential part of a trader's life. It helps you get ready for the market. It helps you get ready, prepared for the new coming week. It's make sure that you are prepared and you know what is going to happen, and you don't have to be skimming through your market. So you have to do this before the market opens, whichever your trading style. Even if you are doing day trading, each night when the market closes between now and midnight, you have to go through all your charts and see which of them are ready to execute, meeting your rules of engagement. And you have to also make sure to go through which ones are getting ready, which ones you crossing out of your watch list because you've opened the trades and then you've closed the trades, and new watch list comes, and the ones you've executed, they go out of your watch list and new one keep coming. This makes it easier for you. And then we have the UK trading session, which is between 8:30 when the market open. The Asian session, I've mentioned about it. So if you like trading the indices, the FTSE and the DAX and the US 30, both of them present some trading opportunity between 7 and 9 o'clock when the UK market open, and the US market open for trading day opportunities. Normally you have opportunities presenting itself when the US market open around 2:30, so you wait till 3. So 8:30 a.m. in the US, you wait till 9. From 9 go in, and if you don't have any opportunities, you come back 2 hours later, and the market prevents full opportunities for you to trade. And having said about that, let's talk about trade management. So trade management is simply when you have placed your trade, just as I've done. I've got my stop loss, and I've got some of them take profit, some of them I haven't done the take profit levels. The euro or Z, I'm going to do the take profit with you. So I'm looking for my entry. I'm looking for this market probably to drop about I'm looking it for this market to drop about 1.6128, so 1.6115, yes, level. So I'm going to put the take profit there for you to see. Take profit is going to be just modify order, then 1.6 1.6128. Okay, so this is all what we call about trade management. So once your trades are in position, you are managing your trade, making sure the trade is going your way. And if the trades start coming in your way, you can move. You see, this is where my stop loss is. Okay, this is where my stop loss is. So when the trade move from my entry point to this position or this position and I'm in profit, I can move my stop loss right from here to here. And you can either go here to amend it as I showed you by going modify order and amend your stop loss by moving it, or you can just click and drag this, you can just click it, double click and drag it, and it's going to come follow you, and you can increase it the same as your take profit level. You can move it like this up, or you can move it like this. So I'm expecting price to break this and come. And the reason why we also that is what you do. And you can if you are building positions, if you are a position builder, and you are building positions, you can trail the trades, you see. So when you, let's say this is your first entry, once and you have a second even entry here, so once this entry is confirmed, you can amend this stop loss and put it in break even, and then use the same lot size to enter another position here, so that when the market give you the confirmation to close your trade, you can do that, and the rest will trail it. And how to do that, amending your stop loss to break even, as I've shown you already. You just go to modify order, and this is the stop loss. You put everything to 00, and then you click amend. Once you do that, it means you have amended the stop loss to 00, and that is a very good way of amending your stop loss. And when we talk about risk management is about also making sure that every trade that you're going in, your stop loss to protect you are always there. Then your lot sizes, which is normally the volume. Okay, the volume, you have to know your account size and your leverage of the account, so that you don't over leverage. In currencies, most brokers offering 1 to 500 leverage. It means if you are going and you are doing one lot size, that means 10 lot size, which is a lot. So you have to know your account size before you know what to do. That's why I told you, you can let me know your account size, then I'll tell you the lot size to do. If your account is smaller account size, like $1,000 and stuff like that, you want to start by doing 0.01, that is 10 cents or 10 pence a trade, just to test the waters, because you are just starting trading, moving from practice account to real life account. Once you build your confidence and your account size grows, you can increase your lot sizes, because it's not a get rich scheme, and you don't want to over leverage your size. Like you see people with 6,000 account size, and they are doing like 300 a point. That is suicide. So this is what is all you need to know about risk management and money management. And then we talk about trade psychology of a trader. The market can discipline you if you don't discipline yourself, but you feel great when everything is going your way and you are making money. But what do? Sometimes there are human error, which it is due to your error. That is why the market takes you out of your stop loss. If you're taken out of your stop loss, that means that you have lost little amount of money, depending on your stop loss sizes and your lot size. And sometimes you are taken out of your trade, or your stop loss are hit, because it's none of your business. It's not your error, because there are a lot of things that happens in the market that we don't see. Okay, and I'm going to show you things that happens in the market that we don't see, because a lot of news items are happening in the markets, and we do not see them. Even President Trump or OPEC tweeting or something like that can have impact of the market. That is why we do intermarket analysis, meaning that prices of oil and gold can affect certain currencies and indices. Sorry about that. So when this happens, you have to be very careful of what you are doing, But how do you change from that mentality? Do you carry on? This is where most traders' edges are broken, because you could have a winning streak for a long time, but you have to tune, you have to check, is your system correct? If your system is not correct, you get back to me and we check it. If you are doing the right thing and the market is taking you out because of news and stuff, that is not your fault. So you just need to do what is right for you, and you have to keep doing. This is where most people lose hope. I put maybe 500 in my account, and I've blown it. I've lost all the $500 or the $1,000 or $2,000. So I'm not going to do it again, and I'm quitting. Remember, like I always say, without mistakes, you never learn. There are a lot of winners. There are a lot of heroes. All those great companies you see in, they make losses, just like trading is like any other business. You make losses sometimes, but you don't quit, and you keep going, and you make your wins outweigh your losses. It's not you can be perfectionist, you can try to do everything, but at a point in time you are still going to have losses in your trade. So once you understand this, you can control the market. Then you have won that mentality game, as I told you about. And when you come here and you go to Forex Factory, this is where you find your trading news. Okay, Forex Factory economic calendar, that is what you see over there. So when you click on the calendar, this is all you see. So this is where you see most of the news items. So either Forex Factory, or there is also one called Forex Data. You can find it on you can find the app on your phone. So all the news coming in various currencies or whatever, the Fed news, you find everything here. The one that is in yellow means that it has no impact on the currency, or the news is not high impact news. The ones that you find which is red here, so today, Wednesday, 2:30 a.m., the Australian dollar has there's a big news coming, so that's why you see it in red. And the USD also 3 p.m. they have the pending home sales FMOC statement, which will affect gold and the dollar. So that is Wednesday. You have a big news coming. Anytime the Fed is speaking, notes it's affecting the gold and dollar, and probably the Dow Jones and the S&P. Then on Thursday you have German prelim, so that is going to affect the DAX. That's at 9 a.m. and that is going to affect the DAX. Then you have USD also red. Then you have Friday USD also there. Then you have the CAD, that is, I think, also a Friday. Yes. So this is what you are going to do, and every day it's updated. Today is Sunday, so tomorrow is Monday. It will come Tuesday. You find everything is there. So this is where you find this. And I also spoke to you about the commitment of traders report, the COT, where I promise you I'm going to show you. Okay. Yeah. So you find the court report. Normally you find it at the us.gov. So what the court report means is, remember I told you about the participants of the market. We, the retail traders, we form the small speculators, as you see. Then they have the commercials, then the non-commercials. So there are three groups. We have the commercials, which are the biggest traders in the market. Commercials normally, when it comes to commodities like gold, cotton, cocoa, coffee, things like that, they buy it and they process it in the factory and bring it to the grocery stores like Walmart, Tesco, Asda, and we go and buy it. So they are using the items, but we are just trading to benefit for the profit. So the commercials controls the market. You can see when it comes to the currency, they need the currencies to buy their raw materials, and this, so they have their seasons. There are certain times in the year that when the dollar or the Canadian or the yen is going to rally big, because around that time the commercials are needing the money to make big purchases. So you can see this is the Australian dollar, and the commercials, this is their long position, 42,600 contract, and this is their short position. So they are the total is they are more bearish. That is the difference. And you can see the non-commercials position as well here. Then we have the small traders, that is represented here by non-rep. So the small traders normally do the wrong things at the time. We want to buy when the commercials or the banks, the hedge funds are buying, and we want to sell when they are selling, because they are the ones which control the market, and they are going to push the market up for us to make profits. And if you look at let's say the British pound, so we can go here and you can see the British pounds as well. The Yeah, you can see the positions which are all there. They are net long and they are net short, and we could do a little calculations about it. Then we have the Japanese yen. Yeah, so when you come here you can see the commercials are more bearish on the yen, 92,194 contract, and their short long positions are 65,000 contract. So the difference means that overall their net position is short on this. And if you come to the banks and the institutions, they are more bullish, because their net position is bullish, because their short position is just 31,500 contract, and their long position is 50,854 contracts. Whereas if you come to the non-repo or the small traders, their long position is 24,000 and their short position is 17,000. So you can see the difference, and this have everything. If we want to, I think let's see, if we go to the usgov.com, there, yeah, normally they do have an indicator which tracks, so you can see open interest also is another indicator which helps to track the long and the short position. So I will check and I'll tell you. So the red ones, let me see, there should be a key down here. I don't want to normally use my mind to, or if there is no key then I can go the code there. Okay, so it seems commercial positions, um, they haven't put any key here, but this is it. So you can see this is the gold. Yeah, gold. So you can see the greens are the commercial positions, I think, and the blue probably, the red one will be the small traders, and the blue one will be the hedge funds. So you can see both the commercials and the hedge funds are heavily long on gold. Gold spot US dollar, that is, yeah. So that is why gold is rallying. And I want to Yeah, I want to see where this is the British pound. Let's see. We've looked at that already, but I want to the US. Let's go to usgov.com/COT. Yeah, so C, that is www.cftc.gov. So that is where you find everything, and it's better to look at it from there, because when you go there, they do all the calculations for you. So you find the net position change data, the financial data, everything is actually there. Traders financial features. Yeah, so you will find I want to find the calculations, because that is what we need. um, yeah, so when you come there, you go through, you find everything there. So this is energy, this is crude oil energy, and you see the largest net position change is here, then the trade volume. So you find everything there, and you can do that to also find the currencies. All the informations are there. Large trade change explanatory note. Okay, and commitment of traders reports. There's been a lot of, because I've got the indicator on my custom chart. I don't normally come here because everything is actually there, but so a lot has changed. But when we go through, you see everything that you need should be there. Weekly swap reports. Okay, let's see what we have here. Group. Okay, let's see cotton on call. So you have you can have all the data for cotton here, but let me see. Clearing office historical. Okay, let me see the data. Net position 10 financial data, law and regulation about the commitments of commission. So these are the people that control. They make sure that everything is there, and their committees and everything are there. But everything of the informations, everything is there about the report. Normally, I think it's updated every Friday. So if you come there, you find all the PDF and the necessary information that you have. So I do a lot of exercise as a trader. I'm up around every day. You can see the Dow has not even reached my entry target, and is starting to drop again, which means I have to wait for, if I don't get in on the buy, I have to wait for opportunities to buy. If I don't get it to come to the level that I want to sell, I have to wait for opportunity to buy. So you have to have a sound mind, you have to be happy, you have to motivate yourself, because nobody is going to do it for you. You have to wake up, do exercise, because a sound mind helps you make better decisions in the trading. And also, you don't have to jump into the market. Remember, market will always drop and market will always rally. So if you miss your opportunity to sell here in the trade, you have to wait for another opportunity when the market is coming up. You don't have to jump into the market when you miss opportunities like going to the bus station or catching the train. There will be times that you get to the station and the train just left, or you run in driver shouting driver to stop for you, but the driver is not going to stop for you, and you just get there and he moves the buses and he goes away. You don't run chasing the driver, but you stand there and wait for another bus to come. It's the same in trading, it's the same in investing. Sometimes you miss opportunity, but when you miss opportunity, it doesn't mean that you should chase the market. You have to wait for market to come. And when you start even trading on your live account, it doesn't mean that you're trading live account, so you should forget about your practice account, which is your demo account, because the demo account is always going to be there. You are always going to practice your strategy. You are always going to learn. You are always going to practice your strategy. Once you find a way, you are always going to develop your own system that suits you to trade and find new things. And when you find new things, you want to come back and back test it in your practice account for 6 months to 1 year and see that it's working before you bring everything back into your trade. So this is all what you'll be doing, and of course I'm there to go through reviews and stuff with you all the time. So this is everything about trade management. This is everything about money management. This is everything about psychology. You could have losing streaks, you could have losses, but you don't have to give up. You have to look at your system and you have to pause if you think your losing streak is continuing in your live account. That's why you have practice account. You have to pause, analyze all the trades that you're losing and see what you've been doing wrong. Go back to your live your practice account, practice your strategy. See me, let's do more reviews and see what you're doing wrong, then practice, then just get back into the market. It's really great time and it's really great opportunity to trade. You can put, even once you get used to everything, you can have a 10,000 retirement account into a different account, dollars that you trade every month. You are not looking for anything big. You want only 10% of the account each month. Compound that for the next 20 years and it's going to be a lot of million for you, which, because you're not going to withdraw any money from it. So I will just pause here and allow you to go over everything that we've done. Then you come back and then we answer your questions. So until then, I'll see each and everyone soon in reviews. Good luck and thank you for allowing me to mentor you, and I look forward to seeing your success story in your own financial journey. Thank you and God bless. Stay safe.